And that sound means that we are live here on YouTube. And for our tackle trading daily halftime report, 128, 2019, Matt, we're starting week 5 of the year. And we are going to wrap up the week of January, probably the most impactful, in my opinion, from a news perspective. A lot going on. We'll see how the market ends up shaking it out, starting out the week down. But how are you doing, brother?
Tim, doing better than Caterpillar today.
Cat's down. Yeah, we'll definitely talk about Caterpillar. I mean, that is one of the things bringing the Dow down. And also, I was looking at the advanced decline on the Dow earlier, and all 30 companies were in the red. Not exactly a big crash day, Matt. 1.5%, 2%, depending on which product. Now, that's a down day. That's a respectful and a healthy red candle, but we're still above support on the S&P. Give me a read on this ES technically, because I think what I'm going to hear is 2,600, 2,700.
You're going to hear 2,600, you're going to hear 2,700, and you're going to hear that until we break one way or the other, T. You do have that short-term, intraday resistance level there at about 2670, 2675. That kind of held it up later on Friday, obviously kind of hit that level. It never really broke that level. That was kind of the high of last week. So you do have that 2670, 2675 level that you got to be concerned about. You break that, you go up to 27. And we've talked about stepping as you're stepping up the stairs. That's just the next level of stairs. Obviously 2600, and you have intraday at about 2630.
It's a lot of this is leadership, or I would say selling from these big companies like Caterpillar and NVIDIA. The one storyline that grabbed my attention maybe as much as anything, and I know we'll look at both those individual companies, but was the NVIDIA storyline. It was that lowered guidance, Matt. And you know how sensitive they are to China and gaming and the way that chip makers can lead. NVIDIA selling on lowered guidance on a non-earnings event feels like Apple from first of the month.
You stole it from me, T. That's exactly what came to my mind. Was Apple did the exact same thing earlier this month when they lowered guidance for the first quarter, kind of as a preparation for what would be a negative earnings report. They're trying to lower the guidance. They're trying to lower that expectation. But we've seen that across the board in this earnings season, Tim. We've seen earnings actually, the guidance start to shift lower and lower and lower, versus in 2018, you start to see earnings guidance go higher and higher and higher. And so economically, I am a little concerned, despite the fact that we've had a positive earnings season with, earnings per shares, most companies beating on earnings per shares, coming in about average on revenue, but they've kind of lowered that bar a little bit coming into the first quarter. So you've lowered that bar a little bit. You are beating better than lowered expectations. So it's going to be interesting. They're obviously NVIDIA's. This is Apple. Now the question is, how does NVIDIA, perform coming out of that? You take a look at Apple very quickly. After they lowered guidance, Tim, Apple came right back up into what before they lowered the guidance coming into their earnings. So it's going to be interesting to see NVIDIA over the course of the next, week and a half as it comes into earnings. But I'm gonna stay away here on NVIDIA before earnings.
Well, the chip makers, I mean, they all run together. Intel, NVIDIA, a lot of these different companies, they had shown signs of recovery, relief, and also some clear air. If NVIDIA broke out, we probably would have been calling that a bullish breakout. Obviously, the news can throw a wrench into that. And it's a reminder during earnings season, especially in this environment, we're seeing this theme over and over and over again. The thing with Apple, fascinating, but they got earnings again this week as well. So what will be, really impactful from that company, Matt, for me, is watching that lowered guidance gap down, backfill. Now, how does the actual earnings come out? Did they drop the expectation so they can beat it like most Wall Street firms do?
Obviously some negative news coming out of NVIDIA, talking about slowing growth, talking about China and, gaming and all this, on the negative. But Tim, I don't think this changes the fact that with Applied Materials is confirmed its bullish reversal breakout. You have AMD that is also showing reversal characteristics and a potential breakout of 22 coming up this week. And you keep an eye on AMD at 22. That's getting pretty close to that level. And I would call that a pretty significant breakout on AMD. And then you got the leader of the bunch. You got Intel, obviously had a negative earnings impact last week, but you still have potential breaks out of 50. So yeah, NVIDIA's negative news can it have an impact on other companies within that sector? Of course it can. But I think a lot of that's already baked in. These charts are all showing reversal characteristics. My two I'm looking at is Applied Materials and AMD. Intel's still above 50.
Now, as we speak, two companies did flash into the green. Johnson and Johnson and JP Morgan on the Dow, but we are 28 down, 2 up. Internals are awful. Down 1.4%, 350 points on the Dow, 24,383. The S&P, same kind of relationship, 4-1, basically 400 to 100 on the internal advanced decline lines. NVIDIA, Caterpillar, Freeport, McMoran, AMD, and ABBV are all leading lower. American Airlines, Pacific Gas, which I don't even think is an S&P component anymore, Estee Lauder, Alaska Air, and L Brands are all up. So you do have some companies that are showing me some strength, specifically airlines here, Matt. Could be oil selling, airlines up. Let's take a peek at AAL, if you would. Number one gainer on the entire S&P today. That's still a downtrend, Matt. What would have to happen for you to call that one bullish? Coming off of earnings here, showing me some reversal characteristics.
Reversal characteristics at 30, though. You look at this on a weekly chart, you'll see it slowing momentum coming into that 30 handle. You haven't had the W formation where you're breaking out. That would occur here at about $40. So you got a couple key technical levels, one at 38 with a downward moving 200-day moving average, and then ultimately here right around this $40 breakout. So for me to call this bullish, I would say it has to, at a minimum, get back up above 38. But I think the most likely scenario, well, let me put it like this. The most likely path for a nice little swing trade setup is it for it to come into 38, retrace back down into 34, and then buy that retracement off the 34 handle.
You know, by the way, welcome out halftime crew. I always like to take a minute in the early part of the show and say, hey, thanks for being here. Appreciate you guys. You guys are the best. Anybody who pops in here live, we do appreciate it. Some people are busy with their schedule. We get the loyal recording, kind of watchers as well, Matt. And if you are watching this back on the recording, leave us a comment in the chat. Let us know how, you like the halftime report. And if you're here live, give us a quick thumbs up and a share. Matt, really stock pickers market, but we are selling. Obviously, airlines are showing me strength. You're going to have individual companies throughout the week. Even if you're on a green day or a red day on the S&P, you're going to have some companies running up and down because of the nature of earnings season. ES here in a range, and I put it on Twitter this morning, until I break 2,600, 2,700, I'm not going to get worked up. Markets are down. There's no doubt about it, but it's not changing my bias when you're down inside your trading range. That's just kind of trading 101.
No, I mean, coming into the market, we're, right on that 40 handle in the market in the newsletter. So we're, on that range of slightly bullish. And I think you got to be slightly bullish from a longer term investor perspective, from a swing trader perspective. I think you got to be a little slightly bullish when you're above 2,600.
By the way, Cody puts together really wonderful prep for me and Matt. Cody, you do a great job on that. He kind of threw my vibe off this morning. Matt reminded me that the Space Shuttle Challenger exploded on this day in 1986. And
well, usually Cody will put in something fun, right? And so he does something fun that happened historically on this X date. And so we usually just pull up the halftime prep notes to get ready for the show. And there's Cody. I'm looking at it going, oh, Challenger, something fun. But Cody, to Cody's credit, he did cross out the fun and just said something today. But like 9/11 for my generation, Tim, one of my earliest memories growing up was sitting in school. I think I was in second or third grade at the time. And watching the Challenger take off and watching it explode was just horrific. Yeah. Absolutely, just scary.
I was probably eating mud outside. I was a little bit younger than you. Yeah, I really don't remember. I don't remember that. I was 7 years old, so 6 or 7 years old. Yeah, it's just one of those things where I don't remember it. But obviously, a very impactful day in history. The space challenge there that we were running through the 70s and 80s obviously did not exactly extend into the 90s and now, but interesting story.
It's a fascinating story, Tim. And the saddest part of that story was the school teacher who had won a contest coming into to go up into space with these astronauts. And, that was a major storyline coming into it. It got delayed, and then obviously everybody else knows what happened. It exploded on liftoff. I think it got up and was going up, and then something happened. I don't know exactly what happened, but it was just a very, very, very sad story.
Yeah, if you ever feel bad about being stopped out of a trade, I guess there's context, right? Cody, is that what you're trying to do here? Hey, markets are down, but it could be worse. You could have fallen out of the sky.
Things could always be worse. No, I like to think that anything.
Was that too soon on a joke?
I don't know.
33 years later.
Is that too soon?
Somebody tell me. Oh, yeah, I probably too soon.
It reminded me of a scene on The Office where Michael Scott makes a joke about this horrific historical thing. He's like, it might be too soon for racism. It might be too soon for the Holocaust. And Tim, it might be too soon for the Challenger.
We got a lot of people
I will
snowed in
applaud
out
any
there.
person willing to venture and go to things like being an astronaut. So there's risk in all of it.
Yeah, it's just a really, really, really sad day.
It is sad.
Well, it wasn't until Cody reminded me. Cody, something fun tomorrow morning, okay, young man? Let's keep it light. I like to start my halftime prep with a positive news story, Matt.
I like it. I like it.
All right, as we're looking through the markets here, obviously part of this is ranking, and technology is down the most. NASDAQ is down 1.7%, a little bit weaker.
I have to interrupt you. Adam with the burn in the note in the chat. You could always be a Dolphins fan.
That's true, Adam.
Being a Dolphins fan is far worse than anything in life. Yes.
Hey, I got the hat. I'll wear it. There's no doubt.
Don't. You're off.
NQ obviously down here 1.7%, Matt. The advanced decline mostly weak. It's a little bit weaker than the broad market. As I look at a heat map, I'm looking at Amazon, Microsoft, Google all fading here. A lot of the FANG stocks are showing me weakness. Obviously, NVIDIA is going to be your number one loser on the NASDAQ 100. But then you've got quite a few different companies that are also down here. I'm looking at AMD down, Amgen down, BioMarin down. So healthcare and tech are the ones that are selling here today. Matt, what's your read on the NASDAQ?
Same read. I mean, we can talk about this till the cows come home, Tim, but you're 6,600 by 6,800. You're 2,600 in the S&P by 2,700. So until one of those levels breaks, I'm not going to overreact to this.
Yeah, and thanks, Harold.
Now, don't get me wrong, T. I am taking the downward movement today as an opportunity to enter into some of those short trades that are from the scouting reports this week. So I am taking that as some confirmation in some of those stocks. But as what I'm suggesting as overall market behavior, I'm not going to overreact to what's happening today. This is a little bit of a profit taking. It should have happened already.
Yeah, for sure. I'm looking across a lot of these major names, though, and it does give you a little pause.
Well, let's take a look at some of those down.
Amazon.
Amazon. Let's take a look at those individual components here. So Amazon down a good, 3% today, but has that shifted the trend on Amazon?
No, it's completely neutral until earnings. You're in the middle of a range. First of all, you're above some moving averages, below others, and you are getting ready for a move one way or the other. I don't think Amazon's going to stay right in the middle of this range forever. So you got earnings in front of you, down today, Matt, but volatility really.
Point is, even down 3%, it's not changing the overall range on Amazon. You're still not doing anything with Amazon in front of earnings. You're not looking to trade the breakdown of 1,600. You're not looking to trade the breakout of 1,700 on Amazon. You're waiting for a read post earnings on Amazon. So yeah, down 3% today. It's a headline, but it doesn't change the overall trader's perspective going into Amazon. What was the next one?
Oh, well, I mean, Microsoft's down 2%. Dow component, S&P component, one of the biggest companies in the market.
One of the biggest companies in the market, down a little bit coming in, but again, does this change the overall mentality of this short-term trend? If you were going to do anything, you would need it to come down in price before you bought it anyways. But you also have earnings on Microsoft coming up, so you're not going to do anything. This is profit taking coming into earnings. There's not strong volume yet on this sell T.
No,
on anything.
There's not a lot of pressure. It is a down day, one to make note of. And I think one thing we like to do on a Monday, Matt, is we want to do a full market prep and give it some context. Part of the halftime report here is to have fun, but also give you guys training and analysis on how traders approach their daily routine. I'm going to respect the red. I'm going to respect the selling. I'm going to make note of what's going on and recognize that if you do break support, you've got potential downside. I'm going to be aware of that, because Matt, if the S&P broke 2,600, our tune would change, but that's true of the upside as well. We are stuck in a trading range right now on the bottom end of that range here today with some selling.
Honestly, Tim, I'm just going to paint you the best case scenario for the market for a trader's perspective. You have massive, massive news this week.
Yeah.
You have massive earnings coming at you. Just let me read you a couple of the names that are reporting this week. Caterpillar obviously reported today, and just to give you the headline on Caterpillar, I believe they were expected to come in at 2.98 cents a share. They came in at 2.55. Revenue was supposed to be about 14.3 billion. They came in at 14.4 billion. Big miss on earnings per share. So that was the first one. Nvidia obviously lowered guidance, but that was not an earnings report. But just a couple names this week, T. Caterpillar, Apple, Lockheed Martin, Verizon, 3M, Nucor, Biogen, Hog, Pfizer, BABA, Boeing, AT&T, McDonald's, GE, MasterCard, UPS, Celgene. On Friday, you start getting your earnings, not your earnings, but your earnings coming out of the energy sector with ExxonMobil, Honeywell, Chevron, and then you have Merck coming out on Friday as well. Tackle 25 stocks that are reporting on earnings this week. Let me get this list right: Nucor, Microsoft, PayPal, Pfizer, ExxonMobil, Valero, Altria Group, and obviously Apple. That's just earnings this week, T. And then you have manufacturing data, you have unemployment data, you have the FOMC coming out on Wednesday, and a little bit of news coming out of the FOMC, T. For the first time, they're going to be doing actual. They're going to have an interview after each one of those policy decisions. And so we are going to get an interview with, Mr. Jay Powell coming on Wednesday. And obviously they have not responded to the Friday announcement from the Wall Street Journal about the balance sheet news. And if you guys want to read up for the pro members, we did some write-ups in the Forex report on the balance sheet. And then we obviously talked about it on Monday as well. And then I'm sure we'll talk about it in the podcast later on today as well. So check out that podcast if you want to get a little bit further information on the balance sheet, but you can also read the Forex report from last week as we discussed that there as well. So I'm sure Jay Powell is going to get some questions on that Wall Street Journal report, and we're going to get a little bit more clarity regarding the balance sheet, because that was one of the major reasons why the market was moving aggressively bullish on Friday. So look for that to create some fireworks. And I said this on Friday, I fully expect this to be a very, very volatile week, T, but you might see a little bit of up and down. And as we stagnate through that neutrality between 6,600 and 6,800 on the NASDAQ, or 2,600 to 2,700 on the S&P, if we can get through this week without a lot of price fluctuation one way or the other, and we get through this massive week and we're on the back end of earnings, and we can kind of focus on the technical condition after that, that's what I'm kind of hoping. I'm not hoping we get strong movement one way or the other this week, because I would think there would be whipsaw impact. I would like to a little bit of up, a little bit of down this week, get through this week, and get us into a clearer trading range coming into next week and the week after.
You know who's holding up the best here today, Matt, are small cap indexes, and the Russell 2000 is the one that we always watch. It's only down about 0.7%. Now, you compare that against the S&P, the NASDAQ, and the Dow, which are all down more than that from a percentage perspective. That is relative strength, and you can see it in the size of the candlestick here. A break above 1,500. If we are moving into a risk-on environment, is it possible the Russell can give us the signal before the S&P breaks? Can that lead the market and be a trusted signal that, okay, here we are, we're going bullish?
Of course it can. The Russell is aggressive. The same way the Russell led the downcharge, well, it didn't lead it. What led the downcharge was Google, Amazon, Apple, Facebook, Netflix, all getting pummeled in October, November, coming into December. That's what kind of led it. But if you remember, Tim, it was the Russell 2000 that we went bearish on first. It was mid-October when we went bearish on the Russell 2000. It wasn't until really coming into November where we started, projecting bearish behavior on the S&P and on the blue chips out of the Dow Jones as well. So could the Russell break out and lead first? Of course it could. It's a small and mid-cap index. It's easier to move. So absolutely. And it's not as prone to geopolitical risk as some of the large cap stocks are.
Yeah, I'm looking at this and I'm seeing some strength here, and a break at 1,500 would be significant for me. I watch the rut every day like any trader out there. And if you're in neutral condor type positions, be very well aware of that. We've had rapid, random, and crazy volatility in this index, Matt.
Well, even we say 1,500 real quick, and 1,500's in that zone. But the overhead, the high of the resistance level in this retracement is 1489.7. So definitely 1,500 is that significant whole number, and we will revert to those whole numbers in this market condition. But a technical break would be 1490, and if you wanted to be a little bit more conservative, 1,500. So if I'm talking to day traders, they're looking at that 1489 handle as the potential breakout. If you're talking swing traders, you're talking 1,500.
Let's take a look at the dollar. Now the government shutdown officially did have, what is it, a hiatus here, as we're calling it that. They're saying give them 15 days.
What do we got? A 3-week reprieve?
Dude, I am all in the mood to talk politics. We're not going to do it today, but I watched the documentary on Netflix on Who is Roger Stone. Fascinating doc.
Oh, I have not seen that. I need to see
Oh my God. It's incredible, Matt. Really, the history he has with President Reagan, Nixon through the 90s.
It goes all the way back to Nixon. He's got a Nixon tattoo on his back, bro.
He does. I know. Very, very fascinating man, whether you're right, left, or center. He's an interesting political figure. I'll tell you, he is a character. Obviously with the government shutdown, they put it on a clock here. The market, I thought, would have responded in a positive way, but there's no resolution yet.
Because nobody believes we're actually going to get a deal done in the next 3 weeks either.
I was going to say the same thing.
The government opened up to get people paid. That's all that happened.
Cut them a paycheck so that they don't riot in the streets.
But you know what, Tim? And this is not reported in that government shutdown. The independent contractors, they're not getting back pay.
Right.
The employees are. And there's more independent contractors than there is employees for the government.
Mm-hmm. Does that impact any of the valuation you see on the dollar, or is it all balance sheet economics in the Fed? I mean, the stuff we're seeing
economics in the Fed.
I think so. Yeah.
100%.
And you broke this down in the Forex report over the weekend. Obviously, there's a lot of different things that can happen with the dollar here, Matt, but it's selling on another red candle. Not a huge carry through day, but you're seeing weakness here. Does this what is our index price here? 95.70. Yeah.
No,
it's going to be a big week.
Any analysis on the dollar right now has to come at that 96 handle. If you are under the 96 handle, your projection has to be down to 95.5 first and then 95 second. So that's just what we're seeing here, T.
Yeah,
and it can snap back. It can snap back. If we get back above 96, I'm not looking to short. But right now, yeah, I'm looking to short currencies coming into the Fed.
Give me a quick peek of the dollar yen cross pair, one of the majors, obviously, two of the majors, biggest currencies in the world. Dollar down, yen up, Matt, little pullback pivot, and there's probably going to be a signal there.
Well, and very quickly on the Forex report, and this was a little weird because I actually had downgraded the dollar this week, and I downgraded the yen this week, and I downgraded the euro this week, but I still kept the yen in a positive territory. And when I talked about the yen in the Forex report, I talked about it as a potential trade here, T. Now, obviously, you do have the Fed this week, but I talked about it. If you're looking at this, well, let me look at it from a different perspective very quickly, T. Let me show it to you on a ETF instead. So if we're looking at the ETF, because a lot of our halftime crew and a lot of the people that tackle trading, they don't trade the actual currency. They don't trade the lot sizes or whatnot. So let me break this down on the currency. So if you're looking at it from an ETF perspective, you have all these FX pairs. FXA is the Australian dollar, FXB is the British pound, FXC Canadian, FXCH is the Chinese renminbi, FXE is the euro, FXY is the Japanese yen. So if you're looking at this just from a chart perspective, Tim, wouldn't you call this a bullish retracement?
Well, yes, you would. It's a deep retracement. You have a violation of a pivot there, which adds some complexity.
I don't know if it's a deep retracement, and I'm not sure this is a pivot. We talked about this the other day. How many candles does it take to make a pivot? It doesn't take two.
Is it two?
It takes three. Okay, so
Cody, is it two? Two candles, right?
Oh Lord Almighty!
Can we get Matt riled up here on a Monday morning?
You're not going to get me riled up, but it's not a violation of pivot since it technically was not a pivot. If you're looking at that as the potential move, that's not a too deep retracement. That's coming into 38 to 50% on the Fibonacci. That's coming in a rising 20-day moving average, a rising 50-day moving average. You've had tremendous price appreciation on the Japanese yen. I talked about why that's the case in the Forex report from 3 weeks, or it would have been 2 weeks ago now. So if you want to review why the Japanese yen goes up when things go down, basically it's a massive short squeeze is basically what it is. But when you see this type of price movement and then you have an upward movement in price, Tim, that's a good old fashioned confirmation on a pivot. So when you're looking at it from the Japanese US dollar versus the Japanese yen pair, you see the movement to the downside. You see a bearish retracement coming back in. The handle at 110 is a very, very strong resistance level. And so what I talked about was, as long as 110 holds, you're looking to short the dollar against the yen. And that's one of the currencies that I was personally looking at coming into the Fed. Now, would you hold that trade in the currency market through the Fed? Absolutely not. Absolutely not. But in the options market, you could collar it.
Yeah, I understand. And I actually think out of all the different currency cross pairs, this one does grab my interest maybe as much as anything here, the dollar yen cross, Matt.
The other, very quickly, Tim, the New Zealand dollar.
Mm-hmm.
I also had it as a potential breakout. The breakout level's got to be there. They obviously tried to test it, came faded back down earlier today. So keep an eye on that one. But the one that really kind of caught my eye is the euro pound cross pair. Okay. Now, what I want you to look at is not on the daily chart here. I want you to look at this on the weekly chart. Mm-hmm. You got major support right there at about the 86 handle. You break that 86 handle on the euro pound cross pair, look for the euro to depreciate into that 84, perhaps even down to the 83. So keep an eye on it for you currency traders. Keep an eye on the euro pound pair at 86. And then the other one that caught my eye, and again, watch the full report, is this euro US dollar pair. No trade here while it's within the pattern. But I've talked about this level in the past. If you get a weekly close under 113, Tim, it's going to get ugly for the euro against the dollar. So I'm not looking at it this week, but just keep an eye on the 86 handle on the euro pound and keep an eye on 113 on the euro dollar pair.
Give me crude oil if you would. Crude oil down. A lot of people trying to figure out a reason why it was down. Supply, demand, all this kind of stuff. Guess what?
The same reason it was down through all the fourth quarter of last year.
Yeah, people sold it. And
so, supply gluttony.
That's I look at the news, crude futures are down over 2%. We're seeing pressure. You had some supply metrics that were rising, but they're going to continue. American supply being put out there on the market is going to be a theme that continues through 2019. I believe that.
It's not just the theme of 2019. It was the theme of 2018, and it will be the theme of 2020. The U.S. is not going to stop production just because the world wants to see price appreciation.
Correct. They're going to keep those rigs online and they're going to continue to put supply out into the market. With that said, 50-55, Matt, same kind of triggers and ranges that we've identified.
I just want to say to Russia and Saudi Arabia, just enjoy it. Enjoy why the U.S. becomes the #1 producer of crude oil in the world. Enjoy the fact that you can't drive crude oil one way or the other simply because you want to move it up or you want to move it down. And, specifically to Saudi Arabia, enjoy it when crude goes down to $40 and $35 and you have to sit there and increase pension plans and cut budget. Just enjoy that. They started this crap back in 2014.
Mm-hmm. Yeah, absolutely. And if it does break below 50, Matt, I would probably move my bias into a moderate bearish position at the minimum. I know you've got a momentum change in here. And again, it's the market. It's the financial markets. We all know that the future is, unpredictable. But what we have is we have probability, Matt. I know that if I get a trigger at 55 or 50, that is confirming the direction of that trend, even with the 2.5%, whatever it is here on that actual chalk. It's not broken out yet. Same with the S&P. Let's not get ahead of ourselves until we get technical confirmation.
I just want to remind the sellers of put options on crude. Crude can move very, very fast.
Yep.
And Tim, you said you would moderately go bearish under 50. I actually would be bearish under 50. I'd be bearish. I literally would move it on. If you're looking at the yardage marker, above 50, you're in the 40 to 40 range. Under 50, that goes to the 15 to 20 yard line.
Yeah, -1, -2, somewhere in there. It would be a debate. It would have to see the volume and the pressure, but somewhere in there, it would definitely be a bearish call. And, I
remember what I said last week, Tim, if you break 50, you're talking about getting underneath every one of those moving averages as well. Mm-hmm. As they have caught up over the course of the last couple weeks. So under 50, I think you would see that 47 handle, then you'd see the 45 handle, and most likely you would see that 42 handle again.
We rarely look at it on a daily basis, but we're doing our weekly prep here. Give me Brent, if you would, /BZ. Crude and Brent, we always kind of like, oh, that one's the same as this one. But Matt, I might see more downside on Brent. I don't know exactly, if there is from a percentage perspective, but I'm looking at more pressure. I'm also looking at a nasty candle, and it's pretty close to its support point. What is that, 58 right there?
Yeah, you give it 58. I would have to do some historical backtesting on this because I don't know the answer to this. In bearish conditions, does Brent get beat up more than crude? I'm not sure it does. I'm not sure. I'd have to do some research on that. But just in October from the very top to the very bottom, Brent did get beat up in this last movement a little bit harder than crude did. Both of them got smoked, no doubt about it.
Mm-hmm.
But if you're shorting Brent under 58 but crude's above 50, I don't like that.
RB/RB, Matt, gasoline. We had a really fascinating conversation about the commodity report in our scouting report planning on Friday. And the question came up, does gasoline lead the other energy sectors lower? Because it had a lower pivot high here as well. Taking it on the chin, 4% down today, Matt, that is triggered right there.
And that's what would happen to crude most likely if it gets under 50.
Yeah.
So obviously all of these trade in line with one another, T.
Yeah.
So gasoline was the weakest of the bunch when we were looking at it in the report. We saw a little bit of decreasing resistance levels, decreasing support levels. It was consolidating on its 20-day moving average. We actually gave it a bearish call in the scouting report meeting. So, this one is definitely leading right now, but I still wouldn't short crude until it's under 50.
Gas prices falling here is going to hit the headlines as a positive. It is not a positive. Matt has talked about that many times. Yeah, you might save $10 at the pump, but it's a reflection of global economic weakness.
Lord Almighty, it absolutely just drives me nuts when people are like, "Oh, I get to save $25 at the pump every month." I'm like, yeah, thanks. When we see layoffs everywhere.
That's right.
I now know how to troll you. I'm gonna start sending you like gas receipts.
Well, in Hawaii,
your gas receipts don't count. You're in Hawaii.
It's so much higher. What is the per gallon price in Hawaii?
So it's not as bad as when I first got here. I think right now it's like $3.15. When I first got here, it was pushing $4.15.
Taxes, obviously, expenses and all that kind of stuff. Hawaii is one of the higher, I believe, in the U.S. California's pretty high. Gino complains about it every time you ask him. It's what it is. I don't blame him. California has some problems, and one of them might be taxes on some of these commodities, Matt.
One of them? One of their problems?
They got a lot of problems.
High of taxes.
Is there a more complex state in the country than California?
No, there is not.
No, from economics, politics, you name it. Gold and silver are up here today as well. A little carry through, Matt. Gold holding 1,300 is impressive in my opinion. The fact that it is staying above that is confirmation of the break. Now, Friday was the big day, on dollar weakness, and you're moving into a Fed-driven week, Matt. Is this a chart that you can confidently say, okay, let's rock and roll, let's spec on it, or would you be more cautious because of the Fed news and everything coming up?
There's always a reason to be cautious. There's always a reason to be cautious. And yes, there is massive news coming out this week. And yes, it's going to impact gold and silver and the dollar and all of that, Tim. Absolutely, 100%. But if you can't buy gold above 13, what are we doing? Yeah, I mean, obviously, we've been waiting for this for 3 weeks. I mean, that was the level that we were looking at all the way back 6 months ago, Tim. It might have been even more 6 months now than when Pete Thomas and myself were analyzing this on the podcast, and it was between that 1,300 and 1,360 range. And both of us said, if it under 13, you're shorting. Above 13, you're buying. And so if you can't buy this above 15, it's the same breakout here, T. If you can't buy that above 1240, and we called that breakout there, and then we called the breakout of 1260, and now we're calling the breakout of 1300. So, our analysis on gold has been pretty spot on in this recovery. I mean, it was all the way back here, Tim, when I did the commodity report for Tackle that I said, gold is a safe haven, and it's time to put it to your portfolio. So, if you can't buy gold above 1300, I don't know. Will this be the time it snaps back and turns bearish? Certainly it could. That's the case in every trade. But yeah, the Fed announcement will not stop me from buying gold in a swing trade right now.
No, this is one of my more bullish instruments in the market that I've been focused on and watching. We've been talking about it day over day over day over day, silver or gold. That's one debate you could have. I think gold is a lot clearer here on a technical perspective. And it fits a narrative of risk off, if people want to find a safe haven, gold
I will, if you're not into anything yet, because I mean, you're above 1300 here, but if you're not into anything yet, you're seeing a little bit of intraday weakness above that 1300.
Sure.
You know, if you were buying it here, you'd want to see a little bit more strength above 1300. But I think there's a good trade right above that pivot at 1303.70. That right there, you get that above that level, get an order above that level, and maybe you're not looking at GC, maybe you're, you know, buying GLD, the ETF product, which I would say I'd say 99.9% of, you know, the people that follow us and, you know, follow tackle trading and whatnot, they're probably trading the ETF versus the actual futures instrument. But if you're looking at buying the futures, make sure that it gets above that 1303.70 handle on GC.
You know who's running here today, and we're going to get into sector, you know, strength and go through all the different ones as we go, Matt. But just grab my eye as I'm speaking are all of the pot stocks. Canopy Growth, CGC, Cron, and Tilray are all up big on a day where the market is down. I know we've talked about the pot stocks, how they've been just that bubble type behavior. Everything's been flashing in here. Young Cody, before you got on the halftime prep, he said, you know, I bought one of these for my wife in a retirement account just to leave it for 10 years. They're showing me a ton of action like they are the rest of the market, Matt. Is there anything with these companies that grabs your attention?
Yeah, Cron. It's on the dirty, sexy money list.
Dirty, sexy money. That's right. Cron is, look at the thing take off. It's a beautiful run to start the year. I mean, just candle after candle after candle on a weekly perspective.
I don't know what scouting report. It was probably 2 weeks ago. We had it on the breakout of 14.
Yeah. Yeah. Cody, is this the one that you bought or did you buy CGC? I know we were talking about it. Canopy Growth is also up here today.
What's the ETF that tracks it?
Oh, I think it's like Cheech and Chong ETF. I'm not sure.
It's not Cheech and Chong. Yep.
Is it pot? No, that's Kotash.
Although that was better than your challenge.
CGC is one of the bigger ones, and Tilray is obviously one of the biggest ones, and they're both running here today as well. I kind of looked at a lot of those cross ones. I think there's one out of Canada. Let me think here. MRJN or something like that.
It's got a Mary Jane type symbol. I can't remember exactly what it is. MJ. Yep.
Yep. MJ.
Can't believe I forgot that one. Matt Justice. Awesome.
Breakout.
That's the ETF that manages all the different marijuana. Breakout of 32. That's a strong breakout of 32.
Yeah, for sure.
I do believe marijuana is a growth opportunity long term.
Well, it's not just you, it's all these different companies. I saw a really amazing expose on the company Tilray and his CEO. And I mean, it's not like the guy's a pot user. He's a businessman, you know, medical marijuana, it's just big business. And a lot of these companies have huge potential in front of them. Is that ETF have options on this one here, Matt? I've not traded this one.
Yeah, it does. They're not very liquid, but you can trade them.
Optionable. Interesting.
I mean, so you're at the money. You got the open interest here. A little wide bid-ask spread on some of these. But like right here, 265 by 285, I'm sure you can get filled at 275 on that.
Sure. Yeah.
So my point is, you couldn't just say, let me buy a 0.60 delta. You would have to find the one that has, you know, tight bid-ask spreads and whatnot. But they're a little out of the money. They get a little wider. But if you're dealing with at the money here, on the put side, they're a little bit more wide on the bid-ask spread. But at the money, yeah. Look at that, T. You want to buy it? Yeah, I would say you can do it.
I definitely think you can. Looking at the rest of the market here, Matt, I want to do sector prep. I want to look at the earnings calendar, a heat map on some of the earnings performance, and kind of do an economic calendar as well, do a full prep like we do on every Monday morning when we're here in the halftime report. Before we pivot and transition in some of those other components, guys, if you're out there and you're watching our show, thanks for being here. First of all, appreciate you. And if you love the halftime report, as always, give us a thumbs up. I think we're at a 50% thumbs up rate right now. I don't even like calling them fibs, but
I love how you're calling it fib. I love that.
Say lovey. All right. So if we're looking here at strength in the different sectors, Matt, February from a perspective historically has had relative strength in materials and energy. It's not starting out that way yet. And we've got Exxon with some of those different key components having earnings later in the week. We'll look at all the different sector rankings. Walk through all the different spiders if you would.
Just first and foremost, historically driven. We analyzed this over the last 20 years. And in the last 20 years, basic materials in February, energy in February have been really good. And just as a reminder, there is a seasonality trade that does start somewhere in February on energy, oil, and just energy related products. So keep that in mind. As you can see, look at this over the next 3 months, Tim. Energy, energy, energy. That's that seasonality play historically. So energy is showing a little weakness today with crude, but keep in mind in that seasonality, it's not the summer that when crude starts going up. It's not the summer when energy starts going up. Seasonality always impacts before the event. And so keep an eye in February, March, and April on the seasonality with energy specifically. That is a trade that has been very consistent over the last 20 years. So obviously every market is a little bit different, but Tim, couldn't you say that with every market every single year? And yet energy has been a leader in February, March, and April, almost literally every single year. Those are the 3 best months for energy historically. So keep an eye on that in those over the next few months. Obviously, if crude breaks 50, I'm still shorting, Tim. Seasonality is just a thing to keep an eye on. Regarding the different sectors, Tim, we are seeing a couple things here. Over the course of the last 4 or 5 weeks, a lot of the market, ever since that December volatility hit, a lot of the market is performing identical to one another. 10 of the 11 sectors were literally doing whatever the market did. But I am starting to see a little bit of decoupling here with those sectors, and you're starting to see that a little bit in the scoreboard as well, as you're seeing technology, coming into this week. Technology is showing strength, consumer discretionary showing a little bit of strength, financial, industrials, communication-based materials, and real estate all showing a little bit of short-term strength. Now, when you see something ranked in the 30 to 35, that's not exactly a bold call, Tim. That is a slightly bullish type of call. And like I said, you're slightly bullish above 2,600 on the S&P. If we go back down under 26, a lot of these sectors would come back down into that neutral range too. But one sector that really caught my eye coming into the report, and one sector that, as you can see, with most of the market in the neutral to slightly bullish range over the course of the last couple weeks, this sector right here, consumer staples, really showed me a little bit of relative weakness against the rest of the market. So let's take a look at consumer staples here, and that's XLP. So as you can see, and one of the reasons why we gave it a little bit of a negative rating versus the rest of the market is, unlike, say, technology or consumer discretionary that got back up above all of its pivot channels, consumer staples did not. Consumer staples kind of stayed in that range underneath the pivot candle. If you break down underneath this 20-day moving average, Tim, I would take that as a shorting opportunity, and maybe not necessarily in the sector, but in the individual components of that sector. I would go look at those individual components to find the best breakdowns, the best retracements. So that consumer staples to me was the weakest of the sectors coming into this week. A little flat so far. Second sector show a positive tick today, but consumer staples was showing me relative weakness. Technology, consumer discretionary showing a little bit of relative strength against the other sectors. And then you have your neutral sectors in energy, utilities, and healthcare right now.
Mm-hmm. Yeah, obviously there is differences between the different sectors, and we can see that in the pivots and the charts and the relative strength. Cody did a really, really good job with the newsletter this week, highlighting that.
Cody's finding his voice on that newsletter, and it'll take him some time, and he knows that, but he is finding his voice, and he is doing a great job in putting that newsletter together. And in that newsletter we put out every single week, we're not only going to analyze the sectors and whatnot, but we're going to show seasonalities. We're going to talk about what happened last week in the market, what happened this week. It really is a great way. If you don't have a lot of time on your hands to analyze everything, it's a great way to prepare for the market on a weekly basis. There's absolutely no doubt about that. The last thing I'll say on the sectors, Tim, is when we're ranking these sectors, we take into account a couple different things. And as we talked about on Friday, everybody's going to see the market a little bit differently. But in terms of the general perspective, we take into account historical performance, but we also take into account our own subjective analysis on where we think the market's going to be going into the future as well. So we do take into account historical performance. We take into account, weeks like this week that, have a lot of economic activity this week, a lot of earnings this week. So a lot of times when we have a big week like this week, we'll be a little more cautious in our rankings. And then obviously we take into account what we think they're going to be doing in the future as well.
Yeah. And like you talked about, earnings are hot and heavy throughout the week. One of the busiest weeks for earnings. I do want to break the fourth wall here for a minute. I think that's a phrase. I'm not sure if I just used it correctly or not, Matt. But I want to get Cody in here for just 2 seconds because we had a really fun exchange
Breaking
with
the
Cody.
fourth wall is when an actor talks to the camera or to the audience who's watching them.
I see. So,
so you think about the 3 walls.
How about this one? I want to go behind the curtain. How's that?
Hey, I don't think anybody would have caught it besides Cody.
You just had to play. But that's the analytical nature of this kid.
He just had to do it. He just had to do it. He does not have the ability not to correct you.
No. Now, here's the thing. We have a very detailed process into how we come up with the way that we rank things. There's a lot of work that goes into this behind the scenes. And we had a great scouting report meeting on Friday. We talked about it. We debated all these different sector rankings. And independently on Saturday, Cody's finishing his report. He calls you, Matt, and he calls me. And he's like, guys, I'm having a really hard time understanding why you're ranking discretionaries where you are. I got it at the 50. I know we talked about it for 2 hours yesterday, but I want to make a strong case. I was so impressed by that. Cody, what was your, how did we get to that conclusion? And how much did you want to argue for your position there?
I think he was ready to argue, and I think he was a little surprised by our reaction. Be like, yeah, Cody, whatever you want, bud.
I like it.
Yeah. Well, it just got me because, if I'm going to explain how the coaches came to a ranking, I want to make sure that, if I'm going to pitch something, I got to believe in it. Yeah. So I was more on the 50 on that, whereas, most of the other coaches were all bullish on discretionary. So I definitely wanted to be like, all right, if I'm going to tell everyone this is bullish, I need to know how and why. So I needed a little bit convincing myself. And I got that from both of you guys in different ways. Matt, more direct way without looking at the charts. And Tim's like, all right, when I get home, we're going to break down sectors, see who's got earnings, see what the individual components are. And between the two of them, I definitely got a little bit more bullish bias on it and presented it that way.
What I loved about it, Matt, is not whether or not, discretionary should or shouldn't have been at the 30 or the 40 yard line. Those subtle details we debated as coaches, and we have the leadership and experience. But I love that Cody, here's a young man who went through mentorship, 2-3 years ago with you. Mm-hmm. And he can break down the markets very well. He knows how to put these reports together. It's finding a voice. And part of that is the passion you have for delivering a very good report, Cody. And I just want everybody out there, if you're halftime crew and you're here every day, you know how much work this kid does. Everybody say, great job, Cody. Matt, what do you think of this newsletter at this point?
It's getting good. It's getting good. And it's going to just get better. As anybody who's been a part of tackle trading for any amount of time, Tim, whether it's a year, 2 years, 3 years, or have been with us since the very beginning 5 years ago, they know that the one thing that tackle will always do is dedicate to improvement. And you know what? When I talk about Cody finding his voice, it's about honestly putting his passion into this work. And so when Cody called me up on Saturday and he was like, Matt, I'm not comfortable with this ranking. The simple reality is I trust Cody. And so I basically said, Cody, I trust your eye. Whatever you're reading, go with it. Mm-hmm. And you got to empower people to do that. You can't just tell people what to do. You got to empower them to find the answer. And I know Cody's going to put in the work, the analytical work to put out a good report. And I trust him. So, I didn't need to hop on Zoom and go through all the analyticals with him, because at the end of the day, when Cody usually calls me and he's not asking for my approval, he's basically, looking for confirmation on what he's already thinking. Cody had already made his decision, and that he wasn't calling to get into a debate. He was going to argue his position, and he wasn't ready for me to say, yeah, Cody, I trust your eye. Just do whatever you have to do.
Mm-hmm. Yeah. One thing in the report that I like, Cody, that you're building in that is a really helpful thing for everybody out there is that earnings heat map. And in a heat map, there's so many valuable different things you can measure. I love the pink and blue relationship map because it kind of highlights where we are in earnings season. And right now, when we've talked about it, we're going to continue to talk about it. This week is really the tipping point. After you get through this week, you're kind of on the back half. Now, there's still going to be a lot of earnings, for the next 2-3 weeks. There's no question about it. But this week is the tipping point. Facebook, Microsoft, Amazon, Chevron, Exxon, Apple, tons of the industrial companies. They're just hot and heavy throughout the week, Matt.
Yeah, this week is the week we've been waiting for with earnings, Tim. I mean, this is the big dog week. You have your Caterpillars that just announced. You have your Apples, your Lockheed Martins, your Verizon, your Babas. Tim, you got General Electric coming out later on this week.
Look at all the hot pink. The hot pink. That's this week.
Hot pink, baby. Hot pink's in play this week.
All right, Adam Stewart, can you meme that? Cody saying, "Look at all the hot pink. Give me some pink." Yeah, I'm getting the only one gift and memed lately. I need somebody else take the blame.
He's trying to shift. It's called a pivot, Tim.
Oh.
Yeah. Well, was it a 2-day pivot or a 3-day pivot?
It's been a 5-day pivot with you, brother.
And then, Matt, one other thing I showed on the video during my newsletters, when you go over, rather than just earnings date, earnings performance, you can look at as well. And as it comes out, I told everyone that probably after this week, I'm going to start putting that on there, because then you can actually see, like, okay, are most companies beating or most companies failing? Because in this volatile environment, that's important if we're seeing majority of companies outperforming or underperforming with their earnings.
I personally, and again, we still have a lot to go with earnings. Look at the black here.
Yeah.
But to me, even with the lowered guidance coming into earnings, I am still taking the overall earnings as a positive so far.
I think so. Lowered guidance has allowed them to come out and beat on some of the expectations. One of the reasons why I'm so interested in Apple is not just the size, but they have that narrative like NVIDIA did now, where they lowered guidance gap down. Now they got earnings in front of us. We'll see how the actual quarter shook itself out. I'll be fascinated with that company. I think there's a lot of potential here this week. Do you expect one way or the other for the S&P to break this range, 26, 27, either bullish or bearish? If you're looking at the volatility and the news and the calendar, Matt, are we looking for a breakout this week?
You certainly could get one.
I think so.
Either way, you have enough news. I mean, any one of these reports, and just any one of these, consumer confidence, the Fed, manufacturing, or the unemployment report on Friday, any one of those individual reports could move this market to break out of its range. You couple that with Apple's earnings tomorrow night, yeah, you have enough news to break this range. Now, again, are we? We'll see. Those ranges are pretty strong right now, but you have a plethora of news to break those ranges this week, and quite frankly, you could move pretty aggressively one way or the other if you do.
Sure. A bunch of stocks I want to run through right as we got our last 5-10 minutes here at the most. And, obviously there's going to be a lot of rapid fire style opportunities here today, Matt. I want to start with some of the Tackle 25 stocks. Biggest gainer on the Tackle 25 today. You had a couple going up. Altria MO up 2%. Delta Airlines on the airlines up about 1%. Constellation Brands up about 0.5%. But most of the market is down. Those stocks have some opportunity. Altria is not a buy on that pivot. In fact, it really looks like the consumer staples sector. And until we get that thing to break, probably we're waiting on that one. What about Delta Airlines, though, Matt?
Keep an eye on Constellation Brands as it approaches 170. That's showing a lot of slowing momentum here off this historical movement to the downside in the fourth quarter. So keep an eye on 170 as a potential pivot, then also 173.5 as a potential confirmation. So I'd keep an eye on that. Altria Group, Tim, that's just buying off the lows. We've talked about that. And no, I would not buy off the lows just because it's up. No. Looking at Delta Airlines showing a little bit of slowing momentum. Wouldn't touch this until it starts approaching 49, if maybe perhaps 50. JP Morgan, I'm out on JP Morgan, but until you break that 104 handle, and honestly, probably 105, nothing to see here yet on JP Morgan.
Yeah. And it may not be the Federal Reserve meeting that has all the volatility, because you have hot and heavy earnings on Thursday and Friday as well. And then there is a job report on Friday.
This is I'll say the FOMC though, Tim. Everybody expects no interest rate hike. Okay. But The market responded very bullish on Friday regarding that Wall Street Journal report on the balance sheet. If Jay Powell clarifies that report and says, no, we're not close to that, that's the only thing that I'm looking that could create a little bit of volatility. I think they're going to be I think the language is going to be patience. I think Jay Powell is going to repeat Mario Draghi from last week. And so the only thing I'm looking at is really that language on that balance sheet. That could drive the market one way or the other.
Couple highlights from the reports over the weekend. And by the way, if you've not seen the newsletter or the reports, that's always where you should start your weekly prep. On the stock report, Matt, a couple of stocks I really liked was Bed Bath & Beyond, triple BY. And it's kind of showing me something here, a little pullback setup.
Yeah, we had that confirmation above 15.
Yeah, Kraft Heinz, KHC, grabbed my eye as well.
Yeah, trigger 146.
And on the option report, a couple of them, INCY.
Confirmation.
And Wells Fargo, WFC.
I had that as confirmation as well.
A lot of signals, and those reports, Matt, they really set you up for the week.
Yeah, a couple for me, Tim. You and I had a couple of the same stocks. Netflix. I'm still looking at Netflix, right? And again, it's not confirmed for me. It's got to confirm above that 340 handle, but keep an eye on that 340 handle. You do confirm above that, you're already post earnings. Obviously, a lot of price appreciation on Netflix. I would have loved a deeper retracement, didn't get it. So I'm looking at that 340 handle on Netflix, Tim. Also, a company I really like, First Solar, breaking above that 50 handle. That's triggered coming into a swing trade as well on First Solar. Bristol Myers from the option report, BMY on the short side, looking for a potential confirmation underneath that 48 handle on Bristol Myers. Conagra Brands, look at this low base here. You break that 2022 handle right there conservatively, maybe aggressively under 20. I like this slowing down. I am not looking to buy it above that, but I do love that break when it does confirm. Obviously, it's not confirming at 2106 today. And then the last one I want to look at is Weight Watchers. And Weight Watchers showing me some more negativity today. This is a stock that just got absolutely pummeled. And Tim, I'm going to be very, very clear on something here on Weight Watchers. Look at this. You start breaking these handles, Steve, you don't have really any major support. And we put the first target at 20, and I think we put this. I think we put the first target at 25, and I believe we put the second target at 20. But Mark said it best, Coach Mark over at Tackle Trading. When we were talking about the targets, he said, "What are you guys talking about? The target's $9." And he's probably not wrong. So keep an eye on Weight Watchers as well.
These trends, the trend is your friend. And there's no question when you get that kind of opportunity, it's hard to map that out in your head for a second target being all the way at 9, Matt, but that's where trail stop mechanics, different things that traders need to learn and
of course, be able to we're not targeting 9.
Right.
But his point was there's no true support levels until you get to $10 or $9.
Yeah.
Cody? I love our little our halftime crew with the jokes over in chat. Weight Watchers getting skinny. This is a crash diet.
Oh, that's good.
Both of those.
Tread carefully, young men. Weight jokes don't always fly.
Tim gets into that a little bit too much too.
Yeah, it is what it is. I'm looking at the markets, Matt. They're fading.
What was your joke the last time we were talking Weight Watchers?
I made some weight joke when it was getting trimmed off. I'm like, hey, listen, maybe we can take 10% off of that or something. I can't remember. It was a bad joke. And I got a message from one of my favorite students. And she's like, Tim, that wasn't funny. And I'm like, yeah, nobody laughed. It clearly wasn't funny. Oh, the things you can get away with if you actually can make people laugh. But when you attempt humor and it doesn't land, Matt, not good.
No, it's not good.
Yeah, not good at all.
You can't get away with what Joe Rogan gets away with.
No, couple things that are going on here this week at Tackle Trading. If you're a brand new trader out there, onboarding tonight, we do that every Monday. You should be getting contacted from somebody. If you ever need something, if you're a new pro member, shoot us a message, team at Tackle Trading. I'm going to give everybody a strong recommendation to join the Team Tackle thread on Twitter, Matt. I've seen a lot of activity and growth over there. Coach's Show, Cash Flow Club, rest of the normal stuff. I am hosting Traders Lounge tomorrow at 11 o'clock Eastern. Anything else, that I missed, Matt?
No, if you are new to the market, new to tackle trading, and just getting into the wonderful world of trading, you can get access to the 7-step guide to trading. And for you pro members, if you need to get brushed up on some technical analysis or some system development, learning the basics of options or futures, and then obviously we have our premium systems in Bear Market Survival Guide, Cash Flow Condors, and the Tackle 25, which is our covered call system that Tim, you did such a fantastic job on.
Well, and we are getting a lot of really great responses from that. If you start a course, guys, finish it. If you're team tackle, if you're a halftime crew member, I know how busy life is, but no excuses. Finish your courses. I think there's a lot of value out of completing something like that. The big priorities are 7-step and Tackle 25 right now for me.
Tim, we've seen it across the board with so many things in life, starting things, but not finishing things. If you start something, finish something.
Oh my God. I got to share a personal moment here with you, Maddie. One of my best friends, and you know who he is, I bowl with him, Justin. He just sent me a text message that he's having a baby girl, and he's been trying forever on that. Yeah, I mean, life is, that's really cool. That makes me happy for him.
Is that hot pink?
Yeah, hot pink today. That's right. Oh man, I'll tell you, father with daughters. I know the emotions of that. And when you have your first child, Matt, there's nothing like being a dad. There's no question about that. All right, halftime crew. Very, very cool. Get in the game. We will be back tomorrow, and, say la vie.